You're watching Masters in Trading Live with Jonathan Rose.
Hey everybody, Jonathan Rose, and welcome to Masters in Trading Live. You can see we switched the screen around a little bit because I wanted to chat. I wanted to say good morning in the chat and be able to see you guys, so now I can see you. Good morning to everybody in the chat. Thank you so much for joining. My name is Jonathan Rose, and you are joining Masters in Trading Live. We get on here every day the stock market's open, 11 a.m. Eastern Time. Go over the market, share some thoughts. Once in a while, we'll share our trade of the day. I get on here, guys. I've done nothing but trade my entire career. My Rhodesian Ridgeback is behind me. And now I get on. We are also live, so when I do silly stuff like that, I can't stop myself. So here we go. Got a lot of things to cover today. Yes. I got the chat open. Is anybody here for the first time? Good? All right. Today, here's the topic for you. We're going to talk about earnings because we are getting very close to the third quarter of earnings season of 2025. See you, Merc. That's what happens. I start talking to him, he gets up and leaves. So today, we're going to go over earnings. Now, I've been trading earnings. I got in the business in 1997. I've been trading the earnings the exact same way since being a market maker on the floor of the Chicago Board Options Exchange in 2011. In 2015, I started Masters in Trading, and we ran an earnings program. It's 10 years later. We are doing the exact same thing every single earnings cycle. It's like clockwork. It's like Groundhog Day. We do the exact same thing. So I'm going to go over the slide deck. I'm going to teach you or show you about our earnings program and what we're going to do next week. Next week, we're going to have 3 earnings classes. Monday, Tuesday, and Wednesday are going to all be about earnings, how to trade options going into earnings, things that have worked for me and things that haven't worked for me. So if you liked the 3 classes that we did on divergences last week, then you'll love the 3 classes that we're going to do on earnings this week. And we'll do that on Monday, Tuesday, and Wednesday of next week. Let me go to the slide deck. I got the chat open for any questions you guys have. All right, fantastic. We're going to get right into it, guys. And I'm going to walk you through exactly why we trade this way. But before I do, let's give a big glockenspiel for our MP trades because we've had some more people locking in profits, 600%. Linda's up 500% on her MP trade. Josh is up 600% on his MP trade. This was a trade that we've had. We have 2 tranches on up. MP is up a ton because the Department of Defense got involved. So great job, everybody who's involved in our MP trade. We like to ring the glockenspiel when those great trades come out. So let's talk about that handsome fellow with one finger up talking about earnings. Literally. It sounds like almost too simple, guys. We do the same thing every single earnings. Think about Apple. Apple's released earnings 100 plus times. Let's say Apple moves 5% after its earnings release. And it moves 5% every single time it releases earnings. Well, the options price an expectation of movement. If the options aren't pricing in enough movement for that 5%, then those options are a screaming buy. Now, there's no edge trading Apple. That's why we don't trade Apple. There's no edge trading Amazon. You have to find these off the beaten path names. We do the same thing every single earnings season. And to be as transparent as possible with you guys, we are regulated as well. So every single trade that we do is time-stamped. Whenever I want to do a trade in our portfolio, I have to share it with Chris Warder, who's in our chat. He's our lead editor. And I'll say, hey, I want to buy ABC, a market order or a limit order. He has to go in and get that fill. We always share the trades with everybody, obviously, before we do that, and everything is time-stamped. These are our closed trades. We don't have any open trades because earnings season didn't start. We've had 41 total trades in our earnings advantage program. 41 total trades. Every single trade, you know what your risk is before you get into the trade. So there's no surprises. If you want to risk $1,000, you cannot lose $1,100. You can only lose $1,000. If you want to risk $500, you can't lose $600 because you're only risking $500. So out of our 41 total trades, we've had 28 wins. We've held these trades for 34 days average hold. We have a 68% win rate. We are buying options. When you buy options, the probability of losing is higher than selling options. 68% win rate on buying options is awesome. Unheard of, and that's what's going on in our earnings program. And we've had 33% average return on those 68% win rate. So these are all closed trades. These are all time-stamped. But again, I got into this industry because I started watching YouTube videos and I thought the quality of education on YouTube was god awful. That's why I started Masters in Trading. And so I want to show you and be as transparent as I possibly can. So you can pause. In front of you is every single trade that we've made in earnings since I've started this program. You can go through every single trade. It's right there in front of you. We have 41 total trades, 28 wins, 34 average days held, a 68% win rate, which is freaking unbelievable, and a 33% average return. Okay? That is our earnings. I got a question. Donald, what's the best low price penny stock to buy today? Not my gig. I don't know what the best penny stock is. I've traded throughout my entire career. I've traded to put food on the table for my family. The last thing I'm doing is looking for the best penny stock to buy. But please pause this, go through those returns, and if you're comfortable, give us a call and join the earnings program. One more thing. I really excel in volatility. Right now, there's a ton of volatility in the market. My team put this together for me. These are my earnings when 2008 happened. In 2006, I took home $800,000. These are from my tax returns. In 2007, when volatility started picking up, I took home $2.38 million. In 2008, I had my highest earning year of my career. I earned $4.194 million. In 2009, 2.378, and then in 2010, when volatility was dropping, $800,000. I've been trading my entire career. These are all the results from our Earnings Advantage program, and we are kicking off our Earnings Advantage next week. For anybody who would like to learn more, you can learn everything at mastersthantrading.com/earnings advantage deal. We open this program up at the beginning of earnings season. All the information that you need, all our past results are in that link. So head over, guys, to mastersthantrading.com/earnings advantage deal and grab this or learn about it while you still can. I get so excited when earnings season comes around because these are our most reliable trades. Also, for everybody that's in our earnings program, next week when we do these 3 classes, we're also going to share our first 3 to 5 trades in Earnings Advantage. So get that dry powder ready. We have new earnings trades coming for you guys on Monday. Make sure you visit mastersthantrading.com/earnings advantage deal. What I want to do now, guys, is everybody in our advanced notice service, everybody who is involved with that MP trade. This morning, we talked about rolling our MP trade into a vertical call spread. I'm going to walk you through exactly what I mean in our all access. For everybody else, guys, thank you so much for watching, and make sure you join us for our 3 live classes starting on Monday, which will explain exactly how we trade earnings advantage every single earnings period like clockwork. You guys are awesome. Thanks so much for watching. Everybody in All Access, you guys sit tight. We'll be right back. All right, guys. Have an awesome weekend.